Hello, everyone, and thank you for joining us this afternoon for part one of MMFC's College Financial Planning webinar. Today, we have Suzanne Wilkins from CU Student Choice to talk about how to make the cost of college more manageable. She'll also talk about the FAFSA, admissions, college selection, scholarship searches, and more. Thank you, Suzanne.
Thank you very much. And it's an honor to be here today with all of you. We're going to jump right in and talk a little bit today about why students should pursue college. You hear a lot of things in the media right now, and is college worth it? What are the statistics? And basically, we know it does, produce higher income over the course of your lifetime. And when I'm talking about college, I'm not just talking about 4-year degrees, talking also about 2-year degrees. Trade schools are really good. Just be careful on, what types of schools that you pick for your son or daughter. And how you do that is there's a lot of good internet tools out there. But one of the tools that we really like to promote is College Navigator. So you can find it at this link at nces.ed.gov. And it gives you basically a really good template of how to make your decisions, right? Whether the school is public or private, how big is the school? What is the ratio of professors to students, which is important, right? When you're making a decision on what school to pick for your child, do they learn in an environment where it's, 200 to 1, one being the professor, right? Or is it more geared for 50 to 1? So these are the things that will help you make that decision for you. As a parent, a little bit of background. I have 2 children that have graduated and have gone through college, and now I am helping my nephew go through the college process. He's actually in his first year of college, and I had, I had to start basically all over again on this college quest, so to speak, right? And I'm in the industry, and it can be daunting. So I just want you to know that you have a lot of resources, free resources available to you through your credit union, through the websites, and we'll point you in those directions so that you can arm yourself with the right tools. So with the College Navigator, something that was important to me as a parent was to, I remember sending my daughters, one to New York and the other one to Washington, D.C. I wasn't familiar with the area. So it gave me some statistics on crime rates. That was important to me. But the ultimate reason why you really use College Navigator is to decide how much the school is going to cost. This is a financial transaction. You have to remember that you are building a budget for 4 or 5 years. And this tool will give you the numbers, right? It also gives you what they typically do over the 4-year period in terms of costs. So they'll break down the cost to room and board, books, transportation, food, all of that. You'll get a year-over-year percentage increase on tuition. And unfortunately, we're post-COVID. So now universities are trying to catch up for that period, right? So we're going to start seeing even more tuition increases in the near future, unfortunately. But again, make sure you use this tool to sit down and make sense of it all and pick the right college for you. Now, when we talk a little bit about the cost of education, it can be a scary experience, right? I'm not going to lie. And I put this slide up every year to just show you the costs, but not only that, but how it's divided up. And it gets to be really important when you start making decisions down the road. So for the purpose of conversation, I'm going to pull out the second bar and the fourth bar. So the second bar is the public 4-year in-state on-campus experience for your student. That comes in at about $27,000, $28,000. The private comes in much higher, right, at 58,000. Now, in the New England area, that could be the public schools could come in anywhere from 31 to I would say 38,000 realistically in this area. You know, what you see on the screen is national averages, and the private schools can be anywhere from 65 to, gosh, upwards of $80,000. Now, that being said, what I'd like to hone in on this slide is that, see the dark blue areas, that's your firm costs. Those are tuition and fees, okay? These are non-negotiable fees. It is what it is. But anything beyond that dark blue is what we call flexible costs, right? Your room and board, books and supplies, transportations, and other expenses. This is where you can choose certain paths based on these costs, whether or not to pursue, you know, a 4-suite room and board as opposed to a private suite room, you know, experience for your son or daughter, for example. So I wanted to just hone in on, you can make a difference on the total cost of attendance. Now, your credit union believes in a value-based approach to financial aid. First, you want to exhaust all your free money, which are grants, scholarships, and federal work-study programs. So grants and scholarships, they're basically free money, right? So the grants come with a stipulation. One grant that comes to mind is the teaching grant. I think it's up to $4,000 now. So that, you know, you have to be a teaching major, right? So let's say in year 2, if your son or daughter decides to change their major from teaching to accounting, those grants can be turned into student loans. So just be aware that grants always have a stipulation. If you're wondering what stipulations those grants come with, make sure you talk to the financial aid office of the college that your student is interested in attending. Work study program, it's sort of free. I put it up there as free, but what this is when you get ready to complete your FAFSA form, and we'll talk about the FAFSA in a minute, you answer whether or not you would want to do work study. And what work study is basically a part-time job. It's usually on campus for students to handle their expenses, right? The only thing about work study programs is that, you know, again, an example of one of my daughters comes to mind. They qualify for work study. Basically, it is needs-based. And the end of September comes around and I get a phone call, right, from my daughter. And she's like, you know what, Mom? I don't know if I can do this work study program anymore because I want to dedicate all my time and energy to getting good grades, because she wanted to move on to medical school. So we had that family conversation. I was like, fine, that's great. You can stop work study, but what are you going to do for that $1,500 or that $2,500 expense that they baked into the numbers, right? So we decided that she was going to pull more hours during her summer job, and it all worked out in the end. But just know that work study is not totally free money. You have to work at it. And if you do change your mind, you're going to have to supplement that somehow. Then the next level is cheap money, the federal direct loan program. We're going to talk about that in a few moments as well. Never want to say no to those things. And then what do you do when you have that gap? So once everything's exhausted, you've taken advantage of the free money, you've taken on a few loans, you still have a use, you know, most of us have a huge gap, right? So where do we take that money from? Do we take it from a savings plan like a 529? If we have a house, do we tap into the home equity portion of it? Do we take out as parents that PLUS loan, the parent loan for undergraduate students? Again, we'll talk about that in a few minutes. Or do we do a private student loan? So if you have all of those options to you, that's wonderful. Just make sure that you talk to like a financial counselor or a planner or even your CPA to make sure you are tapping into the correct source of funds, right? Because again, we're building a 4 or 5 year budget, tuition increases year over year. So it's important to remember. One thing that I did want to mention about that gap, tuition payment plans could be of interest to you. So what it is it's sort of taking that gap. Let's say if you have $10,000 left for either financing or pulling out of your savings account, you can put that $10,000 on a payment plan. Now, payment plans are directly with the school through the bursar's office. You do pay a fee for a payment plan. It depends on the school that you're attending. And usually the term on that is about 10 months, 9 or 10 months. Now you're probably saying, Suzanne, yeah, $10,000 on a 10-month plan, that's a little bit steep for me. And I agree. But you can take maybe $1,000 of that gap and put it on a payment plan. That's $100 a month. Maybe you pay 50, the student pays 50. That's $1,000 less you have to roll into a student loan. Because the ultimate goal here is to keep the student loans at a minimum, right? And what are your other options to explore? So that's also a program that you could take advantage of in the future. Now, the free application for federal student aid, a lot has been changing on this platform, and most of the changes are wonderful. So just to back up, the FAFSA form is a form that a student and parent have to complete every year that the student is in college in order to obtain federal aid, okay, or financial aid. What the form is basically in a nutshell is demographic and income information on you and your son or daughter. Make sure you always go to the studentaid.gov site to get into the FAFSA site. You should never have to pay to get into this site. If you do, you're on the wrong site, okay? So I've given you the link up here on the slide. And usually this form becomes available October 1st of every year, with the exception of this year. Because of all the changes that are happening, this form will now be available in December. We do not have an exact date yet. So I would ask you to bookmark studentaid.gov to make sure you keep your eyes open for the exact date, because as soon as those forms become available, you should fill it out as soon as you can, since federal aid is first come, first serve in this country. So the quicker you fill it out, the better off you are. So we're going to talk a little bit more about why that's important. This is what it looks like, the studentaid.gov site. This is what it looks like. There's a lot of really good information on studentaid.gov. It talks about grants, scholarships, student loans. There's a whole really good section on student loans, actually. Now, I just want to give you an overlay of what the financial aid process looks. So when you complete your form in December, that is going to go to the Department of Education, okay? And what the Department of Education does, it's solely to calculate the student aid index. Okay, so the student aid index is used to determine the financial aid package. Now, for those parents that have already completed a FAFSA for other children in the past, the student aid index replaces the expected family contribution. Okay, so there's no expected family contribution anymore. It is now called student aid index. So you complete the form to calculate the student aid index, okay? And usually a report is sent back to the student, not the parent. The student will receive it in an email that shows you all the calculations and what your student aid index is. Now, the difference on this new FAFSA form is formally you could put up to 10 schools to share this information with. Now, with all the changes, you can put up to 20 schools in that FAFSA form to share their information with the school. If you should have any questions filling out the FAFSA form, there are wonderful hover overs on each question. There's also a number or a chat that you can call to help you through it. And there's a lot of times communities get together and have FAFSA nights just to help parents, navigate the whole thing. Now, as a follow-up to that, I know that we are going to have a free FAFSA webinar. I believe it's November 8th. I have that information towards the end of the slide so that you can participate in that. And if you register for that, you'll get the recorded version of the FAFSA webinar that we are putting together. It's changing almost every day with the new information that we're getting from the federal government. So more to come on that. So once the FAFSA form is completed, not only do your son or daughter receive the student aid report, the school receives what's called the Institutional Student Information Record, the ISER report. Okay, that goes directly to the financial aid officer so that they can put the financial aid package together. Now, like I said, a lot of changes to the FAFSA, and it's all resulting from the Simplification Act. Okay, so it's basically overhauling all processes and systems used in the past to award federal student aid. Okay, so they've done an analysis on calculating and all of that to bring it hopefully a better and more streamlined application process for the user. We're hoping that it reduces some barriers for certain student populations. So basically, what does it mean for you, right? So again, just as a reminder, the new FAFSA form will be available sometime in December. And just be aware that after this year, the form availability will be pushed back to October 1st. So this year it's in December. We don't know the date. Next year it will be October 1st when it becomes available. Okay, and under this act, there's the new calculation methodology. Okay, so like I said, student aid index replaces expected family contribution. Some students may automatically qualify for the maximum Pell Grant now, again, making it easier so that the student doesn't have to answer a bunch of questions. Students, like I said before, students can now list up to 20 schools. Now, this is the kicker. Everyone needs an FSA ID to complete the FAFSA form. And this is also what's different. Tax consent is required by all the contributors on the FAFSA form, even if they're non-filers. So your student doesn't file a tax return, they still have to consent to the tax requirement. Okay, so if you don't give tax consent, you will not be eligible for federal aid. So this is a requirement. And what this basically is an automatic upload of your tax returns to make it easier for the government to calculate your index. Okay. Now, how should you be preparing for the FAFSA? Well, a lot of students probably might not know their social security number offhand or have their social security number card. I would suggest to them to dig that out. You can set up your FSA ID now, even in advance of the form being released. So I would set that up so that you know what your ID is as a parent and a separate ID for your student. You could also figure out your dependency status, okay? That can be found at the studentaid.gov site. Most of your typical 17, 18-year-olds are dependent, but there are some cases where they might be considered independent if they're in the foster care program, etc. So I would check that out. And then again, mark your calendar for when the FAFSA launch date, when they notify us, make sure you put it on your calendar and complete your form as soon as possible. Okay, so I did put this in the slide. So we are going to have a free Completing the New FAFSA webinar on November 8th, either at 1 o'clock in the afternoon or 6 o'clock at night. So you can go to your MassMutual fcu.studentchoice.org site to register for this event. So once you completed your FAFSA form, it opens up the doors to all of this federal aid. So like I said before, scholarships and grants, work study, direct loans. There's some institutional student loans that the school provides, plus loans for the parents, any other additional loans that the schools can come up with. So once you have your index and you've applied to college, okay, and you get a response back saying, hey, you've been admitted, congratulations, they're going to send you an award letter. And an award letter usually gets generated in the month of March and April. It might be a little bit later next year because the FAFSA is a little bit late in December instead of October. So you might have answers a little bit later next year on what your financial aid package looks like. So I wanted to talk a little bit today about, I know it's in the future, so I'm not going to spend too much time on this. But one thing that you should understand is that an award letter is never written in stone, okay? This award letter is based on your income on the FAFSA of 2 years ago, right? A lot can happen in 2 years. And if life event has happened to you, I would make sure that when you submit the FAFSA form, you also note, and I believe there's a section on the FAFSA form, and if there's not, I would also note it to the financial aid officer that you've had extenuating circumstances, such as divorce, death in your family, escalating debt, disability. Those are the things that really can affect your income, right? So make sure that the financial aid officer knows that you've had extenuating circumstances. So you're going to see usually when a school sends you an award letter, they're going to break down the costs. Hopefully they will break down the cost for you. It should be easy to read with a breakdown of tuition and fees, housing and meals, books and supplies, transportation, personal expenses, all of that. And then they're going to show you what the estimated total cost of is for the attendance of that college. This example shows you fall and spring, a breakdown. Other award letters shows you a whole entire year. So that you can calculate what you need. Then what they do is they're going to show you any financial aid offers, excuse me. So such as scholarships and grants, any kind of free money. Okay, so they're going to take, excuse me, the scholarships and grants, and they're going to deduct it from the total cost of attendance. And that's what your gap will be. Excuse me, I'm sorry. My apologies. They're also going to offer you direct loans, whether they're subsidized or unsubsidized loans. So you should see all loans that they offer you, all scholarships and grants. And then finally, what is your actual net cost, right? The cost of attendance minus all those grants and scholarships. And then any savings that you have put towards that is your actual net cost. So how much do you really need? We've already talked about a little bit of the appeals process. If you have that something in your financial life cycle that really affected it, such as death and disability. But how else can we cut the cost of those award letters? So this is, again, for just conversation, a little bit about some different choices that you can make along the way to bring down that cost. So when you take a look at your expenses on the award letter, for example, rent, which is room and board, let's say they estimate it at $4,000. Excuse me. The actual first year that a student is going into college, their hands are going to be tied on these costs a lot of times because some universities require them to live on campus for 1 or 2 years. And then after that 1 or 2 years, it becomes a little bit more freeing where you can live off of campus and save money. So let's say, you could save money by living off campus or maybe going into a suite room of 4 people instead of just 2 people, right? So there are options, And then in year 3 and 4, you could be an RA and maybe get that portion of your bill wiped away. Food is another expense. Incoming freshmen really don't have an option. Usually they're given cafeteria plan A, being you could probably feed 2.5 people off of it, off of that plan. But in year 2, 3, and 4 of them being in college, they'll have cafeteria plan A, B, C, and D, right? D being the lowest cost food program. So those are the ways that you can save money off of your tuition bill. Books. Books are really expensive. They can be anywhere from $200 each to $350 if you buy them new through the university. Now, some majors are going to require you to do that, and some professors will require you to do that. I would always check with your professor to see if you can rent books, used books. I know that there are, Amazon used to do it where you could rent a book for like $6, but now I think it's Chegg that you can rent. So there are other alternatives. Just make sure that you talk to your professor about that. Personal expenses. I'm going to get back to that in a minute, because I'm going to want to jump on my soapbox for that one. But transportation, you really can't move the needle on that other than maybe getting a bus pass if your campus is in a city, or maybe bringing a bike with you. It is what it is. You have to get back and forth to class no matter what. Now, to get back to the personal expenses, I know that we're talking in the future, but this is where students get in trouble with escalating student loan debt, especially those students that live off campus or have any type of credit put into their student account. So let's say I got, as a student, I got all these student loans. I have some savings and I put it all towards my tuition bill. The school's going to take out all the expenses, and sometimes there's a credit, there's a leftover amount that they're going to put in a student's account for either paying rent off campus or whatever have you. And that student has either tied their debit card to that account, or the school gives them a school debit card to use. And what happens is they'll go to their, they'll go to their local, coffee shop and put $5 on for a cup of coffee on the debit card. Well, they didn't realize that they just financed that $5 over 10, 15, 20, 25 years, because the source of funds comes from those loans. So I think that it's really important that if anyone has a credit, to know that they can put it back on their student loan. They don't have to use it unless they actually need it to, pay for rent or pay for an expense through the university, right? So that's where I think a lot of people get hung up, and the debt starts piling up, right? Because they start using things, using the funds for expenses other than school. So let's talk a little bit about the free money, dive into the scholarships a little bit so that we can set the table on this. So again, scholarships are free money, and it's usually paid directly to the school. There are some small community type scholarships that will be paid to the student. What you have to be cautious of is those that are those private loans, what I call private scholarships, those not generated by the Department of Education. Any scholarships that have been earned through like civic groups, religious affiliations are, in my mind, are called private scholarships. What you have to be cautious of is how the financial aid officer views those private scholarships. Again, to give you an example, my daughter, my oldest daughter was very successful in getting a lot of private scholarships, close to $5,000. And what happened was, when she got her award letter back, they took away that $5,000 from her financial aid. So she wasn't too happy with that, and I don't blame her. But that being said, that was a long time ago. That was like 15 years ago when she went to college, right? We're in a very different, unique environment right now where colleges are really competing for students, right? Because we've been put on pause for COVID for 3 years, they're trying to pump up their enrollments, right? So they're a little bit more flexible on what they count in and what they don't count in this area. So I would just check with your financial aid officer before you start expending all this extra energy and time on getting scholarships. I'm not by any means saying it's a waste of time. In fact, both of my daughters, I made them look at scholarships like, winning scholarships like a part-time job. In the summer after their junior year, they spent at least an hour to an hour and a half every week, which I don't think is too bad, searching for scholarships. So, my oldest one, like I said, was very, it was very lucrative for her. My youngest one, not so much, not because she didn't have the grades or, community involvement or anything. It's just, it's interesting. It's a lot of, when you're, think back to when you were 17 or 18 years old, right? And what your headspace was at the time and your self-confidence, or lack thereof, right? So my oldest one, I would come home, ask her, how she did in her scholarship searches, and she would list off a whole ream of them, and I'm thinking, okay, she's on the right track. My youngest daughter, when I went and asked her, she would say, well, I didn't find any today. And I'm like, all right, the first week, I'm letting it slide. Second week, got concerned. Third week, I'm like, what is going on? You can't find anything? Well, it's just that she didn't think she qualified for anything, right? I have one more story that I always tell, and I think it's very impactful to highlight the psychology of scholarship, finding scholarships, right? So I work with a lot of people in the scholarship world, and my coworker sat on a scholarship board. They were giving out $40,000, which is a huge scholarship. And this young man won it. And at the scholarship awarding event, he went to each of the committee members to thank them, but also asked them, what was it that won him the award? What was his community activities? What is his grades? What weighed the most to them? And what they said was, you were the only one that applied. That just blows my mind. So it always, when I think about that story and then I think about my youngest daughter, I would encourage people to always, apply for those scholarships no matter what. So scholarships, to get back to this slide, scholarships are typically awarded based on merit or needs, but it could have specific obligations to them, like maybe you have to write an essay or a certain amount of community hours, and it can be one time or renewable. So that is something to note because of our budget building, right? 4 years, if it's renewable, that's great. If it's one time, you got to bake that into your budget, right? They don't have to be repaid, and the reasons for awarding can be as crazy as you have purple hair, you write left-handed, you have brown eyes, whatever have you. So just keep that in the back of your head. Now, there are a lot of resources out there. These are just some of the websites that I would encourage you to go seek out. The first one, the FastWeb, is basically a scholarship search website. Financial aid is a website that explains financial aid to you, what it is, what are federal financial aid instruments out there or not. College Board is a really good tool to use. It really shows you're able to compare colleges one over the other. And then Raise Me is basically another way of getting funds through a site. So just take a look at these websites to see if they're helpful for you. Oh, I forgot to mention Scholly. Scholly really isn't a website. It's a phone app, and you do have to pay for it. I think it's like, I can't remember what the cost is now, but I think it's $4.99. It's something where you might, it's more convenient than anything. You can load it on your phone and search for scholarships after filling a 10 question questionnaire. So I would check those out to get you going on your scholarship search. Another tool obviously is Google, right? But how do you search, right, is important. One of the tips that I would give you is, let's say if you're a teaching major, hit the word teaching plus association and scholarship. And then you're going to get all of the teaching scholarships on Google, right? So if you're in accounting, it would be accounting, then association, then scholarship. So what you're going to see in the Google list is the highest one first, with the smaller scholarships probably towards the bottom, right? Now, as a tip, those larger scholarships are probably more national and it's harder to win. I would suggest going to the smaller scholarships, the $500 ones, the $1,000 ones. The chances of you getting those are greater. And again, if you treat it like a part-time job, once you start doing the scholarship search and sending in your applications, the easier it becomes, right? Because you can sort of, for the most part, copy and paste some, you can write it maybe 2 or 3 scholarship essays, and they can serve you very well. Another way to search is if you put in your own county where you live, plus the word foundation and scholarship. That's another good way to find out scholarships in your area. So just a few tips and tricks. Additionally, make sure you get in the mindset of making money, okay? Like I said, those small scholarships add up. I would build a scholarship list as you go on, and adding to that list, you can use it year over year. Now, of course, we consider scholarship searching in the end of our junior year, but I want students to do this every year that they attend college. So if you have a scholarship list all ready to go, you can easily use that every summer to go forward and apply. Make sure you follow all instructions. Even if it's 30 pages worth of instructions, or if they say fill out the application in crayon, right? Be very careful on what those instructions are. I know that committee members now, scholarship committee members, are getting more savvy in the way that they ask questions and what they are requiring, especially with the introduction of AI. It's a lot easier for students to just, put an AI response in some of the questions. So I think scholarship committee members are becoming more and more aware of it. So I could see some scholarship committee members requesting maybe a PowerPoint or some more personal questions, something that an AI tool could not answer. So just be aware of that. And if there is an essay, make sure you take the time and energy in proofreading it. Have someone else proofread it for you, because as a committee member on scholarship, I do serve. If I see any spelling errors or grammatical errors, I toss it because I'm going on to the next application. So make sure you take the time with those essays. Include your job history. Part-time job history counts, especially as a community member. If I'm looking at your community service or your activities at school, that part-time job is going to affect that, right? So I'll weight the part-time job a little bit more than I would the other categories. So it's important to list your job history. When you use reference letters, make sure it's from someone that can actually, do the job for you, right? We all have those favorite teachers and guidance counselors. The reference letter. So to make it easier for them to do your reference letter, make sure you give them what we call a student resume. So any achievements from day 1 of your freshman year through today. so that they don't have to recall if you were on the football team or the math team. They can just concentrate on writing you a glowing reference based on your character. And then again, highlight any community involvement and charity work that really does help in the scholarship award. Something to be aware of, any scholarships involving luck, such as drawings, I'd be afraid of. They're trying to get your information probably on one of their sales lists. Any scholarships that it's a sweepstake, lottery type scholarship, it's really easy to complete, or there's no essay, I would stay away from those because they're just trying to get something from you. The worthwhile scholarships have that competitive element, right? So it does require the effort, and it should have multiple sections and maybe some instruction on how to complete it. So just be cautious of that. And like I said, build your scholarship list, and an easy way to do that is through graduation booklets or award night programs. So keep those in your back pocket for the following year, right? If you have any, because that'll be an easy way for you to start your list. Things to avoid, don't apply for maybe one or two, apply for a whole slew of them, treat them like a job, right? Only applying for private. What I mean by that is sometimes I hear parents say, I'm not going to fill out the FAFSA form because I'm not going to get any financial aid. Well, for the most part, you're middle class, you might not get any financial aid from the Department of Education. However, the school uses that FAFSA form to put together their own financial aid package. So you not filling that out might be detrimental to you getting any type of scholarships down the road. Again, just be aware of those deadlines and don't give up searching for those scholarships. We already talked previously about grants. I just wanted to show you examples of what those grants are. There is the federal Pell Grant, the Iraq and Afghanistan Service Grant, Federal Supplemental, and Teaching Grant. All of these can be found on the studentaid.gov site for more information. Let's talk a little bit now about federal direct loans. So when your students get the award letter, they're probably going to get an invitation to apply for a direct loan. So these loans are made by the Department of Education to the student only. The parent is not on this loan. So basically, all the student needs to do is breathe and not have a felony. And now, there have been changes where even students with felonies could probably qualify. So there's been a lot of changes in this section. So just know, again, go to studentaid.gov. They have to be a U.S. citizen or an eligible non-citizen with a valid Social Security number. They've had to have graduated with their high school diploma, their GED, or pass a approved ability to benefit test if they're homeschooled. They have to be enrolled in an eligible program as regular students seeking a degree or a certificate in order to get the direct loan. And they have to be making satisfactory academic progress, which is known in the industry as SAP. SAP levels are different for each university, so you can check out their website to see what that is. And the reason why this is important is that if SAP grades, if your grades start dropping, the federal government can choose to withhold making student loans to you. Same thing on the private student loan side too. Well, when we're going to talk about private student loans, the SAP is just as important. So if grades decline, the loans will probably start drying up. Now, there are two types of direct loans: subsidized and unsubsidized. The subsidized is awarded to students that have a financial need. So what that means is the government pays the interest while the student is in school, and currently there is a fixed interest rate on that loan of 5.5% with a loan fee of 1.057%. So that fee comes right off the top of the loan, so that means the parent or the student has to pay out of pocket for that loan fee. So not everyone is eligible for subsidized because it is financial needs based. Now, everyone is eligible for the unsubsidized, okay, because this is not needs based. So what this means is that the interest is calculated and the student is responsible to pay on that interest. Now, the student can defer this payment until after they graduate, right? So usually, direct loans are for 10 years. And they do have a 6-month grace period. So meaning if you graduate, you have 6 months to find a job and get your life together, and then you start making payments. So the rates on the unsubsidized and the subsidized are the same rates, same fees, and it's a fixed rate. You never want to say no to this loan if you need a loan, because they are usually the best game in town, okay? How much can an incoming freshman get on these direct loans? With the subsidized loan, freshmen can get $3,500, and the unsubsidized, the most they can get is $5,500. I've also put in the limits for upperclassmen there and independent students if you want to take a look at that. If you're wondering if you are an independent student, again, check out studentaid.gov site, and it will give you some direction on that. Now, how do you fund the gap, right? I said before, are you going to pull it from your savings, your tuition, payment plans, your PLUS loan? One of the options that parents could get is a federal direct PLUS loan. This is made by the Department of Education to the parent. The student is not on this loan. This is in the parent's name only, okay? The appeal of this is that the borrowing limit is the cost of attendance minus financial aid, okay? So there's, basically you can get a big chunk of it in under your name. But I think that you need to pay attention to what the rates are. It is fixed, but it's at 8.05%. That's probably the highest it's been in a long time. The origination fee is typically over 4%. Okay. Now the Department of Education, just so that you know, reviews their rates mid-May, and they come out with the rate structure usually the end of June. So keep your eye open for that every year. Check studentaid.gov site to see what the current rate is. The repayment term on this is 10 years. And if the parent gets denied for a PLUS loan, the student automatically qualifies for more financial aid. Okay, so make sure you check that out. But what you need to understand, that there are more paths to take. So if you don't want to take the direct PLUS loan, you can always go to a private student loan. So private student loans are usually in the student's name first and the parent's name second, or whoever can qualify for that loan, okay? Again, we don't want a private student loan replacing direct loans. You should exhaust all of your direct financing through the federal government and then go to the private student loan. Private student loans, the rates vary by institution because now they are governed by the financial institution themselves, not the Department of Education. So each financial institution sets the rates and the terms and the underwriting criteria, okay? So when you're thinking about the rates, are they fixed? Are they variable? If they're variable, what are they tied to? Are they tied to the prime? How many times can it change over the course of the term? Is it every year? Is it once a quarter? Is it once a month? Those are the things that you have to dig into. Origination fees, I usually don't see any fees in this area, but if there are, it can be up to 3% of the principal balance of the loan. Some institutions cloak their origination fees and call it a supplemental fee. So make sure when you go to their website, you read all the fine print to get a better understanding. Private student loans can be anywhere from 5 to 25 years in repayment terms. And again, a co-borrower is usually required because there's underwriting criteria on this. There's income to debt ratios, there's credit score requirements, there is employment requirements. And the reason for that is that private student loans are higher in limits than the federal student loan program, right? As you remember, incoming freshmen, the most they can get is $5,500 in a direct loan. Well, a private student loan could be as high as $75,000, $100,000, $150,000, depending on your major. So there are requirements to protect the financial institution. Your credit union offers a private student loan, which is very competitive in this space because there is no origination fee or prepayment penalty fees. So on any student loan, whether it's the federal government or the private student loan, there are no prepayment penalties. So that means not only you can pay it off at any time, but you can make payments at any time. That is really important to note, because a lot of times people think that if they are in deferment, say they deferred their loan for 4 years while they're in school, and let's say they got into a cash windfall, good tax return of $2,000. They can put that money on to the student loan of their choice, right? There is no prepayment penalty whatsoever. You can also pay as much as you want on the monthly payment. So if your minimum payment is $100 and you want to pay $250, you can go ahead and do that without problem. You can also make payments during grace, that 6-month period after graduation. If you want to jump on it right away, you can make payments right away. So just keep that in mind. They do offer a 0.25% rate discount with automatic payments, and they offer very flexible repayment options while the student is in school. So they'll offer you 3 different types of options. 1, to fully defer the payment while the student is in school. 2, interest-only payments while the student is in school. Or 3, making the regular payments while the student is in school. So, a lot of times parents ask me, which is the best option? Which should I be choosing for my student? And again, it is, on your, it's basically up to you and your finances, right? But how I did it with my children is that I chose to defer mine and make payments as I could. So I that way I sort of protect my credit. If I did it the other way, let's say if I chose interest-only payments while they were in school, and on month 6, I forget to make a payment, or I can't make a payment for whatever reason, because I've chosen a payment plan in those 4 years, if I miss a payment, it's going to affect my credit, right? Whereas if I've been deferred for those 4 years, and if I make payments as I can, and I forget a payment, there's no ding on my credit, right? So there are flexible repayment options. Now, the biggest bang for your buck is if you can obviously make full payments while the student is in school. Most of us can't, but then at least try to do interest-only payments, right? Because what happens is when the student graduates, what happens is all that interest that has been calculated and deferred gets capitalized and added to the principal balance. So now you're paying interest on interest and principal, right? So try to avoid that scenario if you can. They do offer, like I said, full 5 years of deferment. Some students have to go 5 years, some go 4 years, most of them go 4 years with a 6-month grace period. Now, there is a feature where you could possibly get released on a private student loan. And the terminology on that is it's always up to the credit union to release you as a co-borrower, number 1. Number 2, you would have to basically reapply, so to speak. So if your student has made consecutive payments, 4 years of consecutive payments on these loans, you can again possibly remove your name from that loan as long as they can prove that they can make the payments on their own. And again, it's up to the credit union to remove you. But if you're taking a look at comparing private student loan to that PLUS loan, The plus loan is 10 years. The private loan, I could possibly get my name off in 4 years. So maybe I want to, explore private student lending because of that reason, especially if you're ready to gear up for retirement, right? They do have what's called a line of credit on their private student loan up to $75,000. This is really convenient in the fact that it's only one trade line on your credit report, right? The student and the parent only has to apply once during the time that they go to school, and you have the guarantee of knowing that your credit line is backing you up with those tuition bills, right? Now, we will run credit checks to make sure you still comply with the underwriting standards year to year, but it is very convenient. And also, when a financial aid officer knows that you've been approved for a line of credit, they have to, they're breathing a lot easier, right? So they don't have to worry about your student year over year over year. So that's basically what Mass Mutual Federal Credit Union offers you. They also offer a wealth of resources for you. So if you go to their website, you're going to see this screenshot, right? So there's basically 2 tiles in the screen: paying for college and then logging into your account. So paying for college, this will give you all of the information that I've talked about here. There's a lot of resources. Once you apply, you will set up an account with your credit union so that you can talk back and forth with us to finish your application, upload documents, ask questions, whatever have you. So this is a really good source of information. But what I really like that they offer, and it's free to members of Mass Mutual, is the college counselor. So there is, we have someone that has 30 plus years of higher ed financing experience, and she is ready, willing, and able to answer any of your questions through either an email, or you can schedule an appointment with her. She has her scheduler out there, and she'll call you and have like a session, like a 30-minute session with you to talk over any questions such as the FAFSA, how do I find the right college, scholarships, or it doesn't necessarily have to be for an undergraduate person. If someone has student loans that they've graduated and they're thinking about student loan refinance, and they're really confused about what the federal government is going through right now with all the payment pause, expiration dates, and all these new repayment plans, she can help navigate those waters for you. And again, it's absolutely free as a member of Mass Mutual. You can go on and sign up for that. So that is the end of my session.